What's good, everybody? So I always like to get started with prayer. Obviously, I believe in God, so I always start there and then kind of center my focus and things for the day. So that's where we're gonna start, and then we got Forex next. All right, that's prayer for today. Let's go ahead and hop into some charts. So what y'all should be seeing now is what I got on my charts now. Number one thing today, since we already had a move kind of in the DXY yesterday, it's kind of like I'm trying to figure out where we at next, right? Because we already had that move occur, and so I want to know with the DXY and GU and EU, like where we gonna be at next, right? Like where are we gonna be looking next? And we've already had that run on liquidity here in what is this, GU? No, this is DXY. But what I'm talking about here, let's see. So yeah, let's talk about GU and EU. We've already had this nice run on liquidity, and I'm gonna go ahead and just break down for you essentially what I feel like is the best model from ICT to look at. Starting from the front, right? We've got a nice run on liquidity from last week that happened, and we had a nice breaker form. Let's zoom out. So I've already highlighted for y'all essentially what you should be looking at if you're trying to trade ICT's market maker sell model, right? So we have a nice small breaker here, right? If we zoom in, it's a little bit bigger, but it's essentially let's just zoom into this first part of it. Slide these. So got a high, low, higher high, breaker, lowest down close candle here, right? Then you got the fair value gap that completes the breaker and makes it legit. You got price trading back up to it, up into it, and you got essentially that total break in overall market structure because you have a larger breaker here. Anyways, with the small breaker, you have price coming back up after its kind of broken structure here, broke structure, traded back up into the breaker. This would be your first leg of accumulation, right? So you've had the breaker, you've had price break structure, and then you've got price coming back up into the breaker for the first leg. Now sometimes this could be considered a first leg, right? But these are both in the same area, so I would call both of them. You could say both of them are a first leg, right? Just the first leg of a market maker sell model or a market maker buy model is the first touch back into the breaker and fair value gap area, which is breaker fair value gap, right? So this is our first leg of accumulation, which will give us our first distribution right here, attacking the previous sell side liquidity. Right now, your second leg, if you're going to have a true market maker sell model, you're going to have a second leg. Second leg is going to form after the first leg, obviously, and it's going to form to attack another area of liquidity, right? So as we look at it, we've got a second leg here. Price basically comes back up and trades into this range, right? Now, if we were looking at this range, you looked at it. If you looked at any of my other videos, I said, okay, once you've had the breaker, that's when you can start looking for the, fair value, not fair, but the discounts and premiums, right? And so, boom, we have a discount. We have a premium. Price trades into with the Fibonacci, right? So just looking at this range, this high to this low, which is another, break of this structure. This high to this low, we come back into it only 62%, right? And so that gives you kind of like a heads up that, okay, a second leg is forming after you've already had the first leg forming, right? Plus, couple that with ICT's premiums and discounts, right? And then I also talked about using the Asian range theory, but we won't get into that today. We just want to give you the overall look, right? So, boom, second leg. Now you have two areas of entry. You have the first day it came in, and this was one of the trades that I actually took last week. If I can show you the executions, just so that you know I'm not fibbing. So boom, I took a trade right here, tabulated by this arrow, red arrow, and was able to capture this liquidity here. So then boom, you get price trading back up into that same area. Now look, using the fair value gap, you're basically using that midpoint, which is somewhere in the middle here, but regardless, if it doesn't trade past this entire fair value gap, you got a nice setup for a trade, right? So boom, then price then runs out that liquidity the next day, which is it was a high news day. It was a Wednesday of NFP week. So but then comes back and essentially closes down here. So then you have that confirmation that this entire area is the second leg, but you had 2-3 opportunities really to enter into it. And then usually after the second leg forms and distributes, right? So you basically took out this liquidity, then you had a chance to take out this liquidity. You want to look at the higher time frame liquidity, right? Because usually the second leg is going to take out this higher time frame liquidity, right? It's going to go after it, which essentially is what you're seeing, right? Second leg, and then you've seen it basically go after it. But there were a couple of places to enter. Usually, if it hasn't hit the last area of liquidity, right, then you'll have something called the IOFED, which is a institutional order flow entry drill. ICT talks about on his page now. You can go look. Basically, it's when price hasn't sought out that liquidity fully yet, and it still has a chance, it'll pull right back into another fair value gap. It won't go past it. It won't go 50% of this range, and then you have a chance to enter another trade, right? Which is the IFED. Now I want to show you the opposite. So this is a market maker sell model. Now this is a market maker buy model, right? So essentially everything always starts with the run on liquidity, right? Now we didn't get all the way past like this liquidity, but we did get all the way past this liquidity. And then basically once the breaker forms, you'll know that is the shift in market structure, right? Which I have kind of tabulated here. So let's zoom into this side of the curve. So boom, you got a shift in market structure. Let's bring that a little bit. Let's bring that a little bit closer. Yeah, we could just widen this whole thing out. All right, you got a shift in market structure started by the run on liquidity, right? So this overall is a run on liquidity from back there, right? But you had the low, high, lower, low, which this one ran out this liquidity, right? This run, but then established a breaker, which is the highest up close candle, which I guess you could say would be this, right? But I chose this. It's really the same ish range over here. I chose this just because of the wick was higher than everywhere else, and that's what stuck out to me. And if you were to go to a lower time frame, you'd be able to see that. But essentially, you have the breaker form, and you have price trade back into the breaker. We go to the 15-minute, you can see that a little bit clearer. And the reason why I'm going through all this, right, is just to show you why I'm hesitant about taking a trade just yet today. Because you've had the completion of the market maker buy model essentially already. So you have to wait for another one to form, right, before we really get into another trade. And I'll highlight that once we get to that end of this market maker buy model. But essentially, this is your first leg. I told you before on the other side of the curve that the first leg is what trades into the breaker, right? So you have your first leg here, trades into the breaker, and then you have the fair value gap across from the breaker that validates the breaker. Price trades into all of that. Now, again, you have two opportunities to enter in the first leg because this basically happens within the same day, right? 9:45, then 11:45, same day. Then runs out, a little bit of liquidity up until about 3 o'clock, looks like. So then, boom, you got two opportunities to enter the first leg. Price kind of basically runs into this fair value gap. So we're going to either be targeting fair value gaps or actual liquidity. So this is an area of liquidity that if you're going to get a second leg, which then you'll have price trading into second leg. So if you wanted to look at this as like the discounts and premiums, you could just take the range, right? This low to this high, right? Let's stretch it out over here. This low to this high. My price basically doesn't even trade 50% of that range. We'll go back to the hour so we can make it a little bit clearer. Price basically doesn't even trade into the 50% area of that range. Similarly, you could choose this range, right? If you wanted to get a closer look at, what is it going to be, right? You could choose this range if you want to get a little bit closer of a shot at where you want to enter. But to me, instead of doing all that, just take a look at the order block that's right here. You got a nice 1 hour order block within this range here, low to high, lowest down close candle. Price trades basically into the midpoint of that candle, and boom, you have what you need to say, okay, I'm still bullish, because you had the shift in market structure. You had the first leg, which I went on the lower time frame and showed you, and you had price trading into the order block for the second leg. The second leg, we always talk about how price is going to run all liquidity. It's going to try to go as fast as possible, which is what you see here. Boom, a really large range gets this liquidity, kind of fizzles out honestly around this area. But then that's what we traded yesterday, was the IOFED, right? The institutional order flow entry drill, which essentially it basically took on, if we go to the lower time frames, let's go to the 30-minute. It basically had it had a nice fair value gap on the 15, I think it was. I don't know what it was. No, I guess you could just say like the hour chart I was looking at. I don't know, but yeah. So there's this long fair value gap, but you also have this right here too, that I was kind of looking at. Like if price wasn't going to finish any lower than where it was, I was thinking we're going to go up and at least grab this liquidity, and I targeted this, right? So that was my buy side liquidity. We didn't get all the way there, right? Because we had this is the order block from before, so it looks like it kind of like stopped us, and that's what we turned around. But essentially you have the first leg, You have the shift in market structure, first leg, second leg, and then if you don't capture all of liquidity just yet, you're gonna have a IOFED, which you could get into as well. Now, the first leg, second leg is probably the best trades you could take, right? Like that's probably the most accurate you could get. But IOFED is usually pretty good too, especially if I were to get like a larger dip into this area, right? I could have been able to say, okay, if you get a run out of this, then it'll be even clearer, like that I was gonna get this run, which is what we got, right? So I say all that to say that the reason why I'm hesitant in taking the trade right now is because all of this has already happened. And so I'm thinking to myself, yesterday I didn't get the trade that I wanted. I called it, I said that I was going to take it, I took the trade, but I didn't kind of hold to my discipline as far as like staying in the trade, right? So I was thinking to myself, I don't know, like maybe this, maybe that. I don't want to be on the wrong side. Instead, I should have just left my stop below the low and then let it prove me wrong, which I'm learning to do. So, but now I'm like, okay, we already had this happen. Looks like we've had some sort of small breaker over here, since you're gonna have basically it was a run on liquidity, right? But this isn't a true breaker for real. This is like high, low, lower high. This is mitigation block. You got a small little fair value gap. It's like, you know what I'm saying? It's like the stuff isn't clear to me yet. I know that overall, if we're looking at the DXY, which I'll go back and explain, I'm looking at this general area. Let's go to the 1 hour. I'm looking at this order block, highest two up close candles within this range, high to low, and then I'm looking at this fair value gap. Price basically hasn't traded past this area. This is the fair value gap here. It's touched it, hasn't traded past it just yet. I would honestly like to see what's going to happen in this area first, because I'm not 100%, thinking that it's gonna just trade and get these highs. Like it's gotta bypass all of this, plus you got a nice like natural like price gap here that you can use basically as a fair value gap as well, which is across from this fair value gap. So you feel me? I'm like, it's a lot of stuff on the upside to try to knock price back down. And to be honest, I just went over the market maker sell models, market maker buy models. Price really hasn't eclipsed this area of liquidity during this run, right? Like it's hit this, right? These lows, this low, but this is the last low within this area. So that's kind of what makes me think, well, we have to see. In foreign currency, I would like that order block and fair value gap that I'm looking at. I want to see what's going to happen in this area first before I say, oh, I'm gonna just take a sell, right? Like I don't want to just take a sell in GU just because, even though it looks juicy, but then the same way I just showed you that order block and fair value gap on DXY, there you go. You have basically a nice order block and fair value gap right here too. So I would want to see what happens once price, if it's going to trade into this area. Like I could take a trade assuming that it could go down into this area, but like the fact that today is election day for like midterm elections and all that too, it's like I don't know, you know what I'm saying? Like we got this news going on right now. Hopefully y'all can see my screen. Yeah, y'all can see my screen. So we got this news going on right now. It's like there's no high medium impact or nothing like that. Like it's just election day today, and that's pretty much it. So it's like I'm not really 100%. You feel me? So and I'm not 100% in multiple areas, that's where I'd be like, I don't think so. You feel me? So I think the best thing for anyone to do if they're not sure is to wait. Pay attention to their unsurety. You feel me? Turn my camera on for y'all. So I had a question here in the chat. Let's see. Which ICT models do you base your trading on? So thanks for the question, my brother. I think you're one of my subscribers too. I was gonna say thank you for some of your comments, bro. I appreciate it. So let's get to that. So which ICT models do I use? I use a couple. The main thing that I do is I will use this. So let's go to that page. My essential model, right? It's basically based off of ICT's breaker theory. And y'all let me know if this music is too loud. Hopefully it's not. But essentially, I start with looking at the run on liquidity on the higher time frame, and all I do is look for a breaker. Once the breaker is formed, that's when I'm okay. This is kind of loud. Oh my gosh. Let's turn it down. Let's turn it down. Let's turn it down. Okay. All right. So once I find the breaker, then I'm looking for a price to form a fair value gap, right? And once I find the fair value gap that activates the breaker, I want that fair value gap to trade past the breaker, and then all I want to see then is, downstream order blocks and fair value gaps forming for me to enter. So, like, to show you how that looks on the charts, that would just be like kind of similar to what I just showed. It would be, let's go back. It would be like this. Looking for the breaker, this breaker, right? Low, high, lower low, highest up close candle. I chose this one, but you could have chose this highest up close candle. Looking on the 15-minute, I would be looking at whether or not price is going to trade into that breaker to form the next ICT thing that I like to look at, which is his market maker sell, market maker buy models, right? Like once I see my breaker, I'm looking at everything. I want to be looking at everything in the form of the buy model or the sell model. And the reason for that is I can anticipate, the next price move, right? So I see the breaker form, and then I want that fair value gap to form across from the breaker. I want price to trade into it, and if I can get that, then I know I'm on the right track. I could take this trade. This is my bread and butter. I could take this trade. I know that this forms the first leg of ICT's market maker buy model, right? So now I'm looking at everything, framing it in the market maker buy model, because I know if I have a first leg, I should have a second leg, right? So if I have a second leg then, and it forms, and basically I had a hourly order block here that I was looking at. So I have the first leg already formed. I'm anticipating the second leg. All of this is upstream, right, of the breaker. I know the breaker's already happened, so then I can start looking at it in terms of the market maker buy model. I get the second leg, and I know that if I get the second leg, that this is going to be a larger price run. Like price is going to give me like, at least 50 something pips. I like that. And if I can find the second leg, I would like to take that trade, especially if I can see clear, price hasn't traded past the midpoint of this order block range. So boom, there's 2 trades right there in a week. I mean, after that, I really, my goal is to go 2-0 in a week. And then if I can go 2-0, then I'm gonna just stop, because a lot of times people be over trading. And me personally, I've done it a lot. So if I can go 2-0, I will stop myself and just trade demo or something, because I know that these are the best 2 moves that I could find. Now, alternatively, if I haven't, gone 2-0, or maybe I missed or something like that, then I have the opportunity to get into one last trade. So it's three trade opportunities max for me, using ICT's breaker theory, basically his breaker model, and then mixing that with the market maker sell model, market maker buy model. So like within all of that, like you can do more. But like to me it gets a little bit extra, right? You don't have to do more. If I can see the trades like this, I just keep it simple and try to see the trades like this. Like I was saying earlier, you could use ICT's premium discount idea, right? Like you could say, all right, let's look at this low to this high, and let's see. Okay, you'll see that price didn't go, basically didn't even touch the 50%. So maybe that gives you some confluence. Basically this is the simplest way I look at it. But the last thing that I like to look at is just these indicators over here. They're not really indicators. What they do is they just show me like the Asian range. And ICT has something. Oh wait, you had another question. Do you mind giving a confirmation entry on that second leg on lower time frame? Oh yeah, sure. So yeah, let's do that before I get into this Asian range beautifulness. So the second leg, right? The confirmation would be this order block. So if we go to the lower time frame, you can see there's a smaller order block here. But there's two ways you could look at it, right? You could look at this range, this most recent range, this low to this high, and you could use ICT's fib, right? So this is the premium discount idea, where you basically go up like this and go low to high, and you look and see, okay, this price going to come back within basically you want it to come back within either the 62% or the 79%. Usually if it go past the 79%, I ain't gonna take it. But then if you look to the left, hopefully this is not too many lines, bro. I'm sorry with the lines. But if you look to the left, there's a nice order block over here too. So okay, we'll see that we got the 70% basically. So this could be a little bit of a confirmation, right? Plus you ran out liquidity here, so you know you want to go with the higher time frame bias, which is bullish at that point. All right, but then you have this order block over here. This is the lowest down close candle right here. I'm gonna take the fib off the chart since I already showed you that, but you could then go over here and say, okay, this is the lowest down close candle right here. Boom. Price touches that, right? That's the high of the lowest down close candle. Now you could use only the wick if you want, or you could use the entire, wick and body. This wick is pretty long, so I'll just say use the wick, because if price kind of gets too far past that, then you don't want that. Plus we've seen it with the fib that it was already at the 70, so we don't want it to go past the 79% either, right? So this is a lower time frame confirmation for that second leg, that basically price we get here, and you want it to be within his kill zones, right? So this is the London kill zone. This is between 2 and 5 a.m. You might not been up for that trade, you know what I'm saying? So if you missed it, then you could have got into what happens after the second leg, which is the IOFED, the institutional order flow entry drill. So like if you would have missed that 2 a.m. trade, and then bro, let me know if that was a good enough explanation. I can try to explain it better if that wasn't good, or if you didn't understand what I was saying. But so basically then if you would have missed that 2 a.m. trade, which a lot of us may have missed it, I wanted to be up but I wasn't up. Then you could say, okay, if price hasn't on like, let's go back to the hour. If price hasn't gone past buy side liquidity on the hour completely, right? Because if you're looking at this overall market maker buy model, like the end of liquidity is basically up here or up here, right? That's where you got a lot of liquidity. So like if you would have missed this 2 a.m. second leg trade, then boom, you have a IOFED that happens only when price hasn't already sought out the higher time frame liquidity. So that's what I was in yesterday. And basically with the IOFED, it's just a pullback. So like you'll be looking at this fair value gap range to see if it's going to pull back, and if it doesn't go past the midpoint, then you would be looking for buys basically to get the rest of liquidity, which I said was these relative equal highs here. Basically those are the nicest like equal highs. So that's like a buy framing of it. Like I showed the same kind of deal from the other side of the curve, which is like the sell model. And it's the same thing with the IOFED. Like price hadn't got this liquidity yet, but you'd already formed the second leg. And so the fact that you haven't gotten this liquidity yet is a chance that if price basically pulls back into this fair value gap, this is a little bit clearer. Like it doesn't go past the midpoint. So then like boom, like, all right, cool. I could probably take a sell to try to get the rest of this at least. And then price just gives you a little bit extra. So to me, that's the easiest way to look at it, because it's easy to get a little bit lost in like, what am I looking for? You know what I'm saying? But like the reason why I took this trade and then got out was because I wasn't seeing, like I wanted this to go like this. And when it didn't, and I seen that it was approaching 12 a.m., I was like, or 12 p.m. I wasn't confident in keeping the trade in. So I was like, all right, I'm gonna just let it go, take a small loss, and then, at 12, it end up getting me what I wanted. So that's why I was saying earlier, if I decide that I'm gonna go with that idea, I need to stick with it, because I would have had my stop under here or something like that. But this was the best place to put the stop. And then just let price trade it, trade me out if I'm gonna be wrong, and then if I'm right, then I just would have stayed in the trade and got like 50 to 100 pips. So yeah, let me know if that was a good enough explanation, bro. And if y'all have any other questions, let me know. I got about 15 minutes before I have to get on a work call. So hit me with whatever questions you got, if y'all have any. But yeah, I've been thinking about just going ahead and opening up my Telegram page so that people can get, like, I would put like explanations similar to like what I just did in there so that y'all could see them and stuff. And that would just make it easier for you to ask questions, or that way people could put those questions in there and I would basically take them and do videos about them or whatever. But I'm trying to kind of wait until enough people are at least asking for it, because I don't want to just do it and be doing too much. So but yeah, so y'all let me know if y'all got any other questions. But yeah, so otherwise, that's the reason why I'm not 100% about even taking the trade today, is the fact that it's election day, and we've already completed, the market maker sell model, market maker buy model. Like, just because it's been completed, like usually another one's gonna form, right? So when we've completed this one, you completed this one, and then this one formed, right? But you got to look at the timestamps. Like, this one completed on November 3rd. We didn't even get the full breaker until the morning of November 4th. So I guess it was the next day, you could say. And then you got the second leg by November 7th, right? So you got like that's the weekend. So yeah, I mean, I guess you could just say that's like a couple days, because this is Friday to Monday, so it's 3 days in a row, basically, trading days. Well, I guess you skip Sunday, but so like today, I don't even see the proper breaker here. You feel me? Like, this would be the breaker for me, because this isn't like a clear low, high, low. So that's why I'm like, I don't really know. And then with the DXY, I was talking earlier that I really want to see it pull up into this, this hourly fair value gap in order block. Because this is like the zone that if I were to take a trade, you want to take a trade at the midpoint of this area. Plus then you got like this nice price gap here that acts as a fair value gap too. But as you can see, price is beginning to go down, right, with some volume. So that's why I didn't want to take no sells, because you had this area that's kind of still pushing price down. And similar to how we have like, first leg, second leg, all that stuff in the Forex pairs, right? Let's just talk about what that would look like here. This would be my high, low, higher high to form the breaker. The lowest two down close consecutive candles. I go consecutive when there's just two in a row, right? Let's go ahead and highlight this area, right? So like this up here would be a mitigation block: high, low, lower high. Sorry, high, low, lower high, mitigation. I don't like that. I would rather have a breaker here. Let's see. Yes, that was okay. He said he be getting lost trying to get the perfect confirmation, like that 1 minute shift in market structure and price be going. Hey, bruh, I ain't even gonna lie to you. That's the truth. Gotta be careful. Like, I like the lower time frames. You feel me? I like them. But when I'm getting into a trade, I'm looking 15 minute, 5 minute, 3 minute. Only because if I get the same thing happening to me in the 1 minute, like I feel like the 1 minute and the 2 and the 3 and the 4, that's like a what do you call that? The indices. Like, that's an indices thing. You feel me? That where you can really get down, because they trade so much that 1 minute, 2, 3 minute, it looked like the 3 and the 5 minute from the Forex chart. You feel me? So that's why I be like, I'll be using the 3, 5, and the 15 in Forex, just because I feel like I can get a better understanding. It's like not too low, but it's low enough. But then you still got to come back out to the 30 minute and the hour to see what's going on overall, because sometimes you'll be in the right move, bro, but then you fake yourself out because that 1 minute telling you otherwise. You feel me? But you got to really you got to find those time frames that give you the most confidence. Like, okay, I like the 1, but I'm going with the 3, the 5, and the 15. And then if I'm unsure about them 3, I'm going back to the hour and I'm trying to see the whole picture. Because if you can see what I'm about to show you here, then you'd be good. And you should base everything off of whether or not this is forming, right? Like high, low, higher, high. This is your breaker. This your fair value gap. Price traded past it. Price traded back up into it. This is your first leg of distribution. Really, over here, really, on the hourly. I mean, we could get to the 30 minute and see it's really the same. And you can't even say that this is a breaker either, right? This is your breaker over here. High, low, higher, high. These candles, that's the breaker. And let me just show you why it's the breaker, right? So we got these consecutive candles. I like to make my breakers blue. It just makes sense to make them blue. I don't even know. Y'all let me know if y'all got any other questions, because I'm explaining stuff. If y'all don't want to hear it, then I don't gotta explain it, but y'all let me know. But this is why. So boom, this is your breaker. Then you get price trading up into the breaker. Really, I guess you could say this is the first leg, right? Now you got an order block that formed here after you got the first leg. Price didn't trade out this yet, right? This liquidity. So then you got some things that you could do to say, okay, where's my next move gonna be? You got your first leg. Now you're trying to see where the second leg gonna form. To me, I would call all this the second leg, because you got the order block, fair value gap. You could have took this trade. It's a nice little trade to take, right? But price still don't get this liquidity. And then you got price trading back up into this order block range now, right? This is an order block, highest up close candle of this range. I like to look at my order blocks within the ranges, so I can know okay, this is what I'm looking at here. This is what I'm looking at for this range. It helps you to break it down a little bit better. So, boom, price basically comes back up and touches that, right? Just barely, just misses it, but it touches it, right? And then you get a runoff that gets this liquidity. So this is your second leg. This your first leg. This your second leg. All of this, because it's around the same area, really. And this is your breaker. Now, where we at now? We basically had a third leg, really, or you could say IOFED, right? This could be an IOFED if we go to the hour chart. But y'all, hold on, Mo. Yeah, I'm about to be. I said I'm about to be. Yeah. All right. Everybody waking up over here, so I'm about to wrap it up. But so basically, this is the third leg, and I want to see price attack this liquidity here. I got you, brother. I got you. And so that's why I was unsure, because that's where my bias is, right? So then in the foreign currency, hold on, brother. I got you. Hold on. In foreign currency, that would mean that we going above this area, right? If we dip down in here and we get some confirmation and go up, it's just that I don't know. We had to see. I had to see. The DXY shows me what I want to see, but I got to see that same thing in foreign currency. So we got to just see, because I don't really see no order blocks for me to peg anything off of right here. You feel me? So I'm really not 100% on that. But the DXY is showing that it wants this to go up here and really grab the liquidity that we really didn't get yet. So that's why I'm like, today I'm like, I don't know if I'm really taking a trade because I got a meeting in 5 minutes. So it's like, yeah. But hey, I appreciate y'all, hanging with me. I'm about to go ahead and get off, but I'm gonna do my best to continue to do more streams and whatnot, and try to be on here when everybody else is on here. So I appreciate your presence, and I'm gonna go ahead and throw my end screen on the screen now, and you feel me? We'll catch y'all on the next one. All right, peace.
Here, this is facts. I enter right here. It's a demo, but I'm just showing you my executions. I enter right here after the impulse. We already talked about why I entered. I entered because of a order block on the higher time frame, 15-minute, and fair value gap, and I waited for a lower high, got in on the impulse. Boom. I waited until price gave me what I wanted price-wise, till I got to my goal. You don't have to wait all day, all right? Me personally, with a 10 lot size, trading the FTMO $100,000 account, if I can get $2,000 to $3,000 in a day, I am so happy. If I can get $1,000 profit in a day, and that's all it gives me, I'm fine with that. Okay, it's all about stacking profits up day by day, week by week, month by month, year by year. It ain't about big profits. Now, I left the trading because my stops are the profit, and I'm in the same direction as my higher time frame buyers. I have the leverage. Okay, I will leave my trade in until price gets to that next level of liquidity, which at the time, what I had been targeting, let's see, what was I, if I can remember, what I had been targeting, to be honest with you, I was targeting this lower